What are the most important topics for you?
Interestingly, the last time I was at this conference was in February of 2020, which was also a really interesting moment when we were dealing with uncertainty around the pandemic and a variety of other things. And so each environment that we're in presents a different set of challenges. We're obviously dealing right now with inflation, a war, issues in a variety of economies globally. And what we can do is continue to focus on the companies that we invest in and creating value in those companies going forward. We just had our CEO conference, which is a gathering of 28 of our CEOs of each of the companies that we invest in. It happened in New York just this week. And every year we ask them for how they're feeling about the economy and their businesses. And what they told us this year is that they're very nervous about the economy, more nervous than they've been in prior years. But when they think about their own businesses, they're still seeing strong demand and strong revenue growth. So we're in this very interesting moment where we're all a bit nervous because we see what's happening around us in the global economy. But at the same time, business performance is strong. The U.S. economy is at full employment today. So we have these conflicting signals.
But still, there's this big looming risk of a recession, even though it still looks pretty okayish right now. So what could trigger like a serious downturn in your view?
I think it's hard to predict. I think what we focus on is making sure that each of our businesses is resilient to a variety of different economic circumstances. So we're constantly testing and thinking about how can they be more nimble or more agile to deal with a variety of circumstances, because as we saw in February 2020 or we see today, it's very hard to know what's coming next. And dealing with the challenges of inflation and the cost structure or things like that is really the order of the day.
What are you thinking about the interest rate trajectory and how does it affect your investment decisions?
It's interesting. We've invested through a variety of different interest rate environments. We've certainly invested in periods where interest rates were as high as they are now. Certainly the move upwards has been very fast. But ultimately, our job is to take in those inputs, ultimately reflect those in the prices that we pay for businesses, and then manage those cost pressures for each of the individual companies on a day-to-day basis by trying to figure out how do we make our businesses more efficient. A big part of that is technology investment. We're heavily focused on investing in innovation at our portfolio companies to help them become more efficient. The U.S. economy being at full employment, the only way for it to grow is to have more productivity, and we're focused on doing our part on a micro basis by investing in efficiency and productivity at individual companies.
Let's talk a bit about financials, because we recently co-invested into Areal Bank, which was quite a struggle to actually get the deal done. So is that interest rate cycle also a reason why you were interested in the lender?
It's a very interesting situation. We were actually working on that situation for almost 2 years. So your comment about some of these situations being really difficult to ultimately complete is true. And that particular business had a variety of interesting attributes to it. Certainly banks do often benefit from a rising rate environment, and that was certainly part of the thesis. But even more interesting, and I talked about technology, that's a bank that is a leader in innovation. They have a very high-quality payments business and a very interesting software business that serves real estate developers and real estate owners. And our interest in that business was driven really by the bank's investment in that innovation and technology, which we felt like wasn't getting full credit in the public markets.